Okay, so we're going to be going short here. 6 contracts. I tried to get it up in here, but I could not because I had to start the recording and wait for it to open up and everything. So we have a new week opening gap down here. We've got London session liquidity. I was just doing my charting and then I was like, wait, this is the perfect time to enter based on what I was going through. So my understanding right now, we got to the new week opening gap of last week, and all the bodies are staying below it. Like on a 15-minute chart, like look at that. All the bodies are below it. And then we have a break, a shift in market structure. Then there's this fair value gap that's right here. Now, if I go to the 1-minute chart, see this pool of liquidity and these bodies right here, and this pool of liquidity, because that's so close to consequent encroachment, I'm trying to use what I just learned with so I'd want to see speed below this low, gravitating down towards here. This should be a inversion fair value gap, but this is the one that broke structure, so I kind of want to use this one. Um, Using what I just finished in this video, trade explanations, AM sessions, and Hangman PD array. That thought process of it being like a turtle soup right here is where I would have wanted to go short and put my stop loss above the uh daily. This is a sorry, it's not daily. The 15-minute fair value gap. See this right here? Those bodies stopping just by consequent encroachment on the 1-minute chart right here. Those highs. When it went up to like that, that's what I would have wanted to take short, and I would have been okay doing that because I already saw the new week opening gap is really weak. Last week's new week opening gap is really sending price lower. So now that we got into this inefficiency right here, I'm not gonna take one off because I don't feel the need to. I am gonna bring my stop loss down um to where break even would have been, but I got in a little too late down here. It's all right. Now this should be an inversion fair value gap. It's a really nice trade. That's why I put on a lot of size because I trust it. Now we could come back up inside of this fair value gap and start exploring in this range. But this happening right here, that's just like the trigger that we're about to leave the station. Then comes back up one more time, hits the 15-minute fair value gap. It's like the last chance to get on it, and then displace lower. I'd like to see this keep running. Just take out these lows, and I'll get a measurement from this low to where terminus is. I didn't want to take the trade. Well, not didn't, but the only concern that I had is that it isn't past 9:30 yet, but we're inside of the 850 right here to 9:10, which is right here, right now. We're inside of that macro, so time and price have both aligned. I think that's something I should get into. I like that. I'm gonna add two more there. Now it needs to just eat through this and close below it. So stop is gonna get adjusted to right above this candle. So before 9:30 opens, I'd like to see us start to turn around and get violently below that low because the 9:30 opening can be very tricky. So let's take a look at this fair value gap. We should not reach consequent encroachment. Stop loss is just going to go right above the upper quadrant. Okay, so we have touched consequent encroachment, which means I'm not really that interested in the trade anymore. Oh, what is that? That all the bodies staying below it. That needs to happen, but expiration wicks outside of it. No, that's not what I want to see. We closed below consequent encroachment of this fair value gap right there, but immediately after we had a retracement. Now we're looking for another expansion, but this can be time distortion waiting for 9:30. So if I get stopped out, then I'll go right back in after 9:30. I'll leave that on here so that you guys can see that. Again, leaving my stop loss right above here because it shouldn't get there if we're really bearish. If it gets there and I get taken out, then my stop loss has done its job. Now we have a buy side imbalance, sell side inefficiency. Didn't even get my music set up. Okay, let's take a look at this. Very nice. Just borrow it and we'll measure this buy side imbalance, sell side inefficiency. So we touched consequent encroachment. I'd like to get it close below this, but if we don't, it's all right. So now right here, again, this buy side liquidity right there. Now we should just be moving lower right after that. without touching the upper quadrant. I like the close. So it closing down here just really confirmed for me that this was exactly the same thing as this. That's so funny because in the execution, well, not the execution, in the review, the same exact thing happened where this happened once, then it happened twice. And then the price run was able to be fulfilled. So now I'm really looking and studying. This is like a walking forward with a case study. This is what I've done with, I think, every single um, thing that ICT has taught that's caught my attention. Okay, we close below consequent encroachment. Now we should close below the inversion fair value gap. That would be really good to see this continued movement just lower. So we stop the fair value gap from forming right there. That could be an immediate rebalance. It would have to tell us on this candle or the very next one if it's going much, much lower. For this to be classified as an immediate rebalance, you'd have to do it on this candle or the very next one. You'd have to just shoot straight down. Closed here, open down here. I like that. So this is like a wall right here. It's an area that person tried once, twice, three, four times. It's touched it and used it, and we still haven't seen it used as a characteristic that we want it to actually be used at, which is a inversion fair value gap. There we go. So I want to see movement below this low. I don't want to see it pull back into the range because it could be looked at like a hangman, even though we did close very much below it. So I don't think this fits the criteria. I'm still learning, still using it. I'm just walking forward with the information and other stuff that I already know to help me ferret out what's happening in price. So now I'm going to remove all the risk. Going to go right above that because this should keep us protected. And 930 is coming up. So what I'm going to do is I'm going to remove two, take that itch off of wanting to take some off. Gonna look and take another two right here. Uh, put that as four. And then we'll have the remainder one on if all of these do get hit. believe you said when two PD arrays are overlapping, this is called a shadow. I'm not sure. That one I wasn't too kinked up about, or it didn't really like get me excited and get me going. But no, I love this. This right here. This management on this trade, this is a new level that I've unlocked completely. I That level of precision that I had right there with the logic being used on it, I have never done anything like that. Well, I've done stuff like that where it's come very close to my stop loss but hasn't taken it, but that was completely luck. That was 100% luck. This was managed and executed skills, walking forward with a logic based idea of what should and shouldn't happen. I was literally walking forward with if this, then that statements, just as he teaches, and it's working. But this is literally the first instance of me using the Hangman PD array, or what I think is the Hangman PD array. And my model is model 2022. Anything that deals with fair value gaps, I'm really all over it. I really like them. It's my cookie cutter approach to getting things out of price. Now imagine I was in from up here, the 15-minute fair value gap. Been nice. All right, so it's 922. Can we get below this low and speed up? So let me see. Speed. I want to see it grab this liquidity quickly. I like that the bodies are staying in this lower quadrant. Now, I'd like this to happen before 9:30, so that 9:30 can come back into these inefficiencies up here, or 9:30 speeds up and gets us towards that new day, new week opening gap, which is currently the target. So this is low hanging fruit. This is where I think price might want to get to throughout the day, or this is where I think it's gravitating back towards. So between this pool of liquidity and terminus, the halfway point, I'm taking a partial there and seeing if I could get the runner on to go to the bottom. So right here, I think this is time distortion. It's waiting for 9:30, but I'm chilled. I already took a partial. My stop loss is in a good spot. If we get closer to 9:30, I will move it down more, just because 9:30 can like zigzag. It could go past my stop loss, make me take a loss. I'm just gonna lock in more profits. As 9:30 gets closer, so like 9:28, I'd be putting my stop loss right above this high, and if that takes me out, then that takes me out. Okay, so we got our partial. Still gonna go ahead and move the stop loss down. And now we've got a free ride to see if we could get on with a majority of this. Go to balance, 27th, lock that in. still got unrealized profit of 1,662. Well, yeah, that's the business. Um, yeah, that is all for today.